Good evening, I am Ibrahim Sani and you are watching Market Talk. Axiata Group Berhad saw third quarter net profit fall 7% to over 200 million ringgit from 200.5 million ringgit a year earlier. But revenue rose on growth in its Malaysia and Indonesia operations. But much of the growth has also been fueled by Axiata's new businesses and associates. None other than Edotco Group's Berhad recorded growth from expansion of its portfolio and higher tendency ratio. Year-to-date basis, Edotco accounted for about 6% and 7% of group revenue and EBITDA respectively. Driven by higher tendency across all its operating countries and the maiden country contribution from Pakistan's operations, Edotco recorded revenue growth of almost 10% year-on-year, and its year-on-year tendency ratio rate also rose to 1.5 times from 1.4 in August. Edotco announced its biggest expansion plan with the proposed acquisition of Dioda Private Limited to obtain approximately 13,000 more towers in Pakistan. Upon completion, Edotco will be the 8th largest independent tower company globally with close to 40,000 sites in its total portfolio. So joining me in this very interesting discussion is Suresh Sittu, the Edotco Group's Berhad CEO. Welcome to the show, Suresh.
Hey, well, thank you, Ibrahim. It's a pleasure to be here.
I don't want to sing praises about the Edotco so much, but indeed, the company has grown from strength to strength. Let's talk about the recent numbers that Axiata Group and your company has published, particularly in the third quarter. The net profit dipped slightly. Does this worry the management of Axiata and, for that matter, you as the head of Edotco?
No, I think there are very good reasons on why the net profit was a little bit lower. I think when you look at numbers, you have to look at the whole. And on a quarter-to-quarter basis, there are always movements, which as long as you understand what's happening, you can either take corrective actions for, or you can understand are just consequences. So firstly, I think what's good about the numbers, high revenue growth and a solid EBITDA. On the net profit side, the main reason is FX movements. So I think that will account for most of the movements in net profit for Edotco year-on-year or quarter-on-quarter. The challenge of being a multi-country operator is that you have to operate in many different currencies, and you have exposures that are often connected to the USD, to the ringgit, and to the local currency.
And that's why we focus very much so on the ratios, particularly the growth ratios. And both Axiata and Edotco does have strong ratio growth. Many of the analysts out there, particularly after the announcement of the results, gave a very strong recommendation towards Axiata, saying that the growth numbers are quite favorable, particularly heading towards the fourth quarter. But zooming in on Edotco, the acquisition on Pakistan, it's going to be huge for your company. Do you think that this whole exercise can be completed within this year?
It's a tremendous opportunity for us, and we're very excited. You're right, it's huge. It adds over 13,000 towers to our portfolio, so we go to a nearly 40,000 strong sort of tower portfolio company. We're really driving to get the acquisition completed this year. We're going through approvals. We have the first set of approvals from the Competition Commission in hand, and just working through the rest of the process in Pakistan. There's always a slight risk of delay. We don't see that if anything happens, that it would be more than a month or two. But the current target, let's try to get the transaction closed by year end. And so next year, have a 40,000 portfolio fully operating under the Edotco banner.
Last year, Axiata suffered a little bit of a loss, particularly for the FX losses. And it was reported earlier this year. And of course, going towards the end of the year, we're seeing the FX risk hitting the bottom line as well. Do you think that there will have to be a serious way of managing the FX risk, particularly for multinational businesses like yourself in Edotco?
You know, I think it's an issue that we've always talked about, both as management team, also with the investor community. The reality is that when you do multi-country operations, you have to put up with some level of FX risk. And actually, movements of the FX one way or the other depends on whether you're holding cash or you're holding debt, and in which currency. So it's not an easy thing to predict. What we prefer, rather than to proceed to look at options like hedging, which is very expensive, particularly against operating cash flows, I think it's very hard to find the right instrument to help you, is to instead employ methods which we call natural hedging. So, for example, with the deal in Pakistan, we're sourcing a lot of the debt onshore in Pakistan rupee. So the debt you have matches the revenue profile you have.
So it's basically insulating you from the FX risk.
Yeah, not 100%,
yeah, of course.
But a much larger proportion is therefore matched to the local currency.
Is this, therefore, the cognizant management approach for other markets that you guys operate in?
Absolutely. We are putting in a capital structure which we feel will be more efficient. It's not something you can do overnight. I think step one was to capitalize the business, to carve out the assets from Axiata. We did that mainly with equity infusions from Axiata. Step two was to increase equity in order to buy assets like Pakistan. And that's when we had the fundraising with Khazanah, INCJ, and Co-op becoming investors.
Co-op coming in very strong at over $100 million.
That's right, this year. And I think they proved to be very strong, supportive shareholders. Both themselves, the Japanese and Khazanah, I think, have very independent voices and, have been providing great guidance to us as a company. And encouraging us to do step three of the capital structure, raising more debt. I think as a towerco, we have to bring our debt levels further up in order to sort of really maximize the value of what we're building. So post-Pakistan, we are probably expecting that we should get our debt levels up to about 2.5 times EBITDA, which is reasonable. And we'll probably be working with the Axiata Group in the coming year to see how we can further access opportunities to raise more debt as well.
With the debt raising exercise, are you going to be issuing papers as well and raising debt from the capital markets?
At this point, no. I think we're looking at commercial loans, particularly because of the natural hedging strategy I just talked about. You want to have sort of currency, matching in various countries. We feel that for what we need right now, which is mainly to fuel the growth post-acquisition, we can manage that with onshore commercial debt. Of course, if there's a further acquisition opportunity, we'll explore other options.
We'll take a short break, but when we come back, we'll discuss a little bit more about Edotco. Don't go anywhere. Welcome back to Market Talk. You're watching, I have with me the Edotco CEO, Suresh Sidhu. Pardon for my false start just now. Suresh, we were actually quite engrossed with the conversation of the FX. Again and again, this story has come up for Axiata Group for quite some time. One thing that baffles me is that there seems to be no end in terms of managing FX risks. So while we understand that the conversation of FX will be exposed going forward anyway, let's discuss a little bit more about the business itself. We've discussed slightly on the 13,000 towers that you plan to acquire in Pakistan. Currently, you have over 35,000 towers. Right now, what is the plan for getting the tenancy rates up, particularly when you have many of these markets operating in various kind of economic conditions?
Yeah. Look, I think, sorry, just a small correction. Today, we have around 30,000 towers owned, operated, or managed. And we'll probably take it up to around 26,000, and we'll take it up to around 40,000 with this acquisition. You're right. The key to this business is growing tenancy ratio. We've grown tenancy ratios over the last few months. In spite of growing towers, we've gone from about a 1.44 to a 1.50 ratio, which I think is very positive as well. But if we're going to really monetize our investment, we need to increase tenancies considerably as well.
So what's the target rate? I mean, 1.5x is not optimal.
It's not optimal. I think typically in the industry, you're trying to get to a number that's, say, between 1.6 and 1.8 as a stable-ish ratio, because you have to allow for the fact that actually you add new towers. When you add new towers, the ratio will go down. You have to find more customers to add to those towers, and the ratio goes up again, right? So So I think we're really focused on making sure that in every country we have a strong second customer. So for example, here in Malaysia, our number one customer is Celcom. We work with all the operators, and I think we're having a lot of success. But we probably, as with other countries, should try and make sure that in the next 12 or 18 months, we've got a very solid long-term relationship with a second party other than Celcom. In Pakistan, we have a great relationship, which we will kick off once the towers are ours, with Jazz, the number one mobile operator there. We'll have to make sure that 12 to 18 months after acquisition is completed, that we are building a very strong relationship to get a good high-volume second customer on our towers.
That would mean that you would have to have a strong local team there trying to hunt down sales. I mean, do you think that the operations of working out of KL is optimal enough trying to get a strong local team in all the markets that you operate in?
You know, we're very lucky. We've done, I think, one thing extremely well, and that is something towercos don't normally talk about: people. You know, we're assets. People want to know our tenancy ratio, but really what drives this business forward is good people.
Okay.
You've got to make decisions on the ground, and you can't do it from KL, absolutely. Yeah. So even in a country like Pakistan, where we have just only recently managed to acquire some towers and now have the big deal, we've always had a team on the ground. When we like a country and we're investing in a country, we'll make sure that there's a team on the ground or working on the project. So we're in the fortunate position that we've had a country MD there, a gentleman called Arif Hussain, a Pakistani, who's worked internationally, helping us develop and build the business. So now that we've got a business to run, he's already been in role in country for a while. He's well known in the industry, and I think he can build a leadership team going forward. What we do is where there are some skill gaps for the time being. So for example, integrating 13,000 towers is a very complicated task. We're going to send one or two people. In this case, I've sent the ex-country MD of Bangladesh, who's a Malaysian, Darryl Sinapa. So he's supporting Arif because he's got the learnings. So he's out there to make sure that we do the right job in bringing the assets over.
Now, of course, these are not just the frontier markets that you operate in. You also operate in other frontier markets. How are the growth there?
Actually, I must say that I'm surprised by the strength of growth across all countries. And I put it down to two major factors that are sort of changing things as well, or what's driving growth. I think the first thing is that operators are probably starting to see a slight improvement in the economics everywhere. You know, the last 2 or 3 years have been pretty bloody, but you start to see some hints of light. I'm not sure that necessarily means that we're in for good times from operator profitability point of view, but you start to see that maybe losses are bottoming out, you know, small upticks in revenue and profit. The second thing is that people are going full tilt on 4G, and data is driving investment decisions everywhere. And I think infrastructure companies really benefit from that because data is a relatively low yield business. It's not like the voice business. Every time you make a call, you pay. Data, you pay upfront and you get a lot of capacity which you use as an individual customer. It means that operators need to manage their cost and investment more wisely. Hence, why spend capex on steel and grass? Let infrastructure companies do it.
Okay, so that means you would have a little bit more focus in terms of rolling out the kind of core business that you have. The thing that I want to highlight right now is that 5G standards are going to be perhaps decided next year. That would substantially improve on the load of towers in terms of data transfer. Would companies like Edotco be ready for that kind of influx of data surge among consumers?
I think so. I think, firstly, people will always want to optimize on existing locations. That's the first thing. So the company that has access to a large portfolio of locations, us, we hope, will always be in the front of everyone's planning and plans as to how they might roll out 5G. Secondly, of course, I think 5G will also mean a lot more hotspot type of coverage. And we need to adapt our business model the next few years to be ready for that. So we're doing two things. We're actually moving from being an order taker to an order generator. We have something which we call lat-long partnerships. So latitude, longitude, that's how we run sites. You give me a latitude and longitude, I match a site. What we do in this instance is we go to property developers and owners. So for example, we worked a bit with Shell in this country. We're trying to work with certain property developers in other countries who have a portfolio of locations. And we say, hey, give me rights to put towers or structures in your locations.
Areas or premises.
Yeah, it could be commercial. And we don't build a site. We market the lat long and say, hello, Mr. Operator, we've got a right to this site. Are you interested? We'll build one for you. Right?
That's interesting. That's so interesting. How is it coming along? I'm pretty sure it's a little bit more advanced here in Malaysia.
It's more advanced in Malaysia. In Malaysia, it's a more common thing. It actually takes a while for operators to change the way they work because they like to optimize their radio plan. They're used to giving you orders. So I think it'll take a bit of time to get to that point. But I think the message is, look, we're basically building access to more locations in advance of people's demand sometimes. That's a good thing. The second thing is we're trialing more technologies that are in-building or small cell related. So for example, this year we should complete, which will be, I think the first of its kind, a 4G shareable small cell here in KL.
How does that work?
So it's think of it as a building or a plaza where instead of having a traditional tower, we basically cable it with small radio antenna.
So the entire structure is a tower?
Correct. The entire structure is active.
Oh, okay.
Right? Per se. That's the lingo that we use. When you're in a building, as we are here, you can make phone calls. That's using traditional active in-building infrastructure. Small cell is lighter, more optimized for data, should give people great throughputs. And actually, the way it's configured, much easier to implement. We need to build a learning curve to get its adoption up. And hence, that's why we're investing ahead of the curve in proof of concepts.
All right, we'll take a short break. But when we come back, we'll discuss about the outlook of 2018 for Axiata and Edotco. Don't go anywhere. You're watching Market Talk. I'm your host, Ibrahim Sani. With me is Suresh Sidhu, the Edotco Group CEO. Suresh, we were talking at large about the global businesses that you have. I want to focus a little bit more about Indonesia. The two brands or the two companies within Axiata that contributes a lot in terms of revenue and profit would be on Celcom and XL in Indonesia. Do you think that Indonesia has a growth propensity that people keep on talking about? Particularly, how does your business fare in Indonesia?
Well, actually, Ibrahim, we have stayed away from Indonesia from an Edotco perspective. I think in itself, that perhaps reflects a couple of things. Firstly, Indonesia's dynamic market, and I think we've seen from XL's results that I think you've got to maybe sometimes live with the volatility, but there's huge upside and potential in the country. And I think XL is displaying a strong momentum now in sort of taking this forward. When you're an infrastructure company, though, I think you've got a couple of challenges. It's a huge country, relatively low price points. And so I think to come in as a new entrant would mean that you need to build scale up very quickly. And I think that's not easy.
For Indonesia.
For Indonesia, exactly. So probably it's a country, I haven't seen the latest numbers, but in terms of tower count, well over 100,000 plus locations or so. So if you come in, how do you generate enough scale to be cost effective that's interesting to you from an investor point of view, and also interesting at a price point for the operators, because they don't want to spend on a high-cost tower co. It simply doesn't make sense to them.
Yeah.
Of course, then, I think you could consider acquisitions. But the reality is there are 3 big tower cos already in Indonesia, and they seem to be doing reasonably well. And they have extremely high valuations at this point in time.
So therefore, market entry price point would be problematic for you guys.
Exactly. So at the end of the day, we are very keen on emerging markets. That's what we do, emerging and frontier. But we also have to be sensible investors, So I think Indonesia would be a great country to operate a business in. But I've got to be prudent, and I've got to be fair to my shareholders and investors.
Okay.
I've got to see whether there's actually an investment case or not. And I think at this point, we would probably say, not right now, and we should probably look at other markets.
Let's talk about some of the possible investments that you're going to make, particularly when you are raising debt and you're going to be sitting on a sizable amount of cash. Is there any hints that you could give to the market right now on the types of markets that you plan to enter, the kind of investments that you plan to do?
Sure. As you know, Ibrahim, we never make forward-making statements. But I think...
Unfortunate for us.
But I think what we are looking at is staying in our footprint, because we believe there's still a lot of opportunity. We count the footprint as South Asia and Southeast Asia. That's the focus. At this stage, I've said Indonesia doesn't seem to be accessible by us. We'd also probably stay away from India with a huge restructuring going on there. But there are other countries, and I think the lesson of Edotco is to go in early when a market is turning and being receptive to shared infrastructure.
I'm sorry, I've got to raise this, but this plan is working for many markets, Pakistan, for instance,
Yes.
Bangladesh. It's not working that well in Sri Lanka, is it?
I think you've got another factor that you need to sort out when you go to a country. You've got to work with the government to get a regime that recognizes infrastructure sharing, right? So in every country we've gone in, we've actually invested a huge amount of time, and we're doing the same in Sri Lanka to create a license or an authorization framework that lets us operate, right? And that's part of the skill, I think, of Edotco, but it does take time.
Yeah.
And I think at this stage in Sri Lanka, we've spent a fair amount of time, and I think we're getting some traction, but we're probably maybe months or maybe a year or so away from when there would be perhaps the opportunity to have a fully licensed or authorized entity. So today in Sri Lanka, we provide services. We've got a team on the ground. Also reflecting the discussion earlier where I said, look, if we're going to do a market, we put a team on the ground and we at least make sure we know what we're talking about. But we think there are some other countries, particularly in Southeast Asia, that we can also focus on. However, Ibrahim, I think the number one opportunity right now is to look at in-market opportunities where we already are. I talked about finding a strong number two. We probably prefer at this stage, assuming deal economics are right, to look for opportunities in the countries we're in to buy additional towers, either to boost the bottom line of number of towers and tenants, or even to consolidate some of those customers onto common towers that we already have.
And of course, this plan is meant to improve on your standing in the markets that you are already in, to actually deepen your penetration with your existing partners or potential partners going forward.
Yeah, look, I think the simple thing in this industry is exactly what you talked about early, tenancy ratio. More customers per tower will lead to better economics of the business over time, right? And that's our job, to just drive that sharing ratio up. And, there are a number of ways to do it, organic and inorganic.
We don't have much time left, but is there a stigma for other telcos to operate with Edotco?
I think there was a bit of effort by us to make sure that people realize that although owned by Axiata, and today Axiata still owns about 60-odd%, we were and we are run extremely independently. So there was a learning phase where I think operators had to see that we demonstrated credible independence. I believe we are past it. You can look in the tenancy ratio growth that operators are coming to work with us, and we don't see too many problems now. We run a separate board. We run Chinese walls between commercial teams, and we take our commitments, whether you are a sister company or you're a Telenor company or whether you're a Vion company. Whatever commitments we make to our customers, we take very seriously indeed.
Final question, because of the personalities that you have in terms of your investors from Kuwait, the Japanese guys, do you think that the decision-making at the management level is impeded because of many of the investors that you have right now?
Actually, quite the contrary. I was a bit concerned when we did the fundraising that, and of course, because you stay private, investors therefore have a number of rights, that you might end up with a relatively complex governance process. I think I really want to give credit to the investors, including Axiata, for being practical, for allowing management to run things. And I think of course, they make their views and their, maybe preferences known, but they're always ready to trust management and to ensure that views are maybe part of a discussion rather than any diktat. So we've been very lucky, and I'm very happy with the situation we find ourselves in.
I wish you all the best, Suresh. I've been speaking to Suresh Sidhu, the CEO of Edotco's Number Heart. But that wraps up this episode of Market Talk. Be sure to follow us on Twitter, Instagram, and Facebook at 501 Awani. Download our app on the Google Play and the Apple App Store. And remember, you can listen to this interview wherever you get your podcasts. Simply search for Astrawani or Market Talk. I'm Ibrahim Sani. Thanks for watching, and goodbye.